What's up, everybody? In this video, I'm going to go over some market analysis so we kind of know what to expect for the next week or two. What you have in front of me is my SPY chart, and basically, we're always going to be analyzing SPY as that's going to be a proxy for most of the other stocks in the stock market. Um, so, this is the SPY daily chart. Since last time I made a video, we made a new all-time high, and we have just been grinding up slowly, basically. I'm going to go ahead and turn on AVWAP-Q. I always start off my videos analyzing with that indicator, which is this white line right here. And AVWAP-Q is simply VWAP anchored to the beginning of each quarter. So the new quarter was on July 1st, and this is where the new anchor is. And this is a really good indicator to use to determine a short-term bias. So when the price is trading above AVWAP-Q, that's basically going to give you a bullish bias in the short term. And when price trading below AVWAP-Q, that gives you a bearish bias. So as you can see, basically since July 1st, price has been trading above AVWAP-Q, has been testing it. We had a candle wick down here with buyers stepping in to recover it. AVWAP-Q held here, stays bullish. We had a bear trap here that happened on Wednesday this week where sellers really tried bringing price down below AVWAP-Q, and buyers stepped in to recover it, and that happened on very high volume. If I go ahead and go on the 5-minute chart, reason why I call it a bear trap is because, let's go back to Wednesday, this right here, super large red bearish engulfing candle on extremely high volume. This typically is what you're going to see when you get like a legit move, whether it's the upside or downside, a large candle with high volume. But I guess this happened because of I don't know if this is true or not, but apparently people were saying that because of like the letter about J Powell being fired is what caused the sell-off. I really hope that's not the case because that'd be stupid in my opinion for the market to react to that. But regardless, what we do know is sellers stepped in very aggressively and buyers are able to recover price. And seeing the price action fly up like this suggests that that was a bear trap. It got a lot of traders maybe short or exiting their longs or stopping out for other institutions to buy up those positions and continue moving higher. So in the short term, this is still bullish. We're in a bullish structure based off this. What I do want to talk about though is I have a thesis where I do expect to see a 5% to 10% pullback in the market coming soon. Because when I looked at recent price action, I've been seeing that every time the market makes a new all-time highs after a large drop, like 10% or more, usually what we tend to see is a 5 to 10% drop, maybe like a month or two after that. So if let's just say on Monday we start, selling off, a 5% drop would bring SPY down to about, 597 or so, 598. And if I turn on the moving averages, we can get a better idea. So here I have the 50 in blue, 150 in green, and the 200 in red. And I'll go ahead and turn on the 100 as well in gray. So a 5% drop from the highs would be basically down just below 50 SMA. A 10% drop, which, I don't see it happening, would bring it down to 564. I don't see that happening from here because that means we would break down below the 200 SMA. I really don't think that's going to happen given such a bullish market backdrop. So if we sell off next week, let's just say from this high here, I could see us doing up to a 7% drop, testing the 200 SMA again before resuming in a very strong second half of the year, particularly probably going to be in the Santa Claus rally. So if I go back and just briefly show you the times when the market made a new all-time highs after large drops, you can kind of see what that looks like. So this was a 2020 drop from COVID, and this was a new all-time high that we made. So we made a new all-time high, and about just 10 days later, we ended up selling off for a total drop here of about 9% down to the 100 SMA. Before that, we had the first trade war and interest rate hike cycle. This drop here, we made a new all-time. I'm not going to count this one, but I'll count this new all-time high here since we poked above all-time highs currently and are trading higher from it. So this one, we made a new all-time high, and it took about 30 days. 30 days before we saw a drop of about, 6.5%. All right. I expect a drop kind of like this that we see here. A drop, consolidation, and then super strong rally to the end of the year. This rally started basically mid to end of October, which goes in perfectly in line with the seasonality, which I'll show right now. So here is a S&P 500 index seasonality in general for every year. And this is a 20-year time range from ending in 2023, right? So based off seasonality, the market starts getting really weak in September and October right here, right? And then near the mid to end of October, you're going to start seeing this really strong rally up. So following what we saw in 2018, 2019, I think we're going to see something similar to this. Right now we're in July, right? July is one of the most bullish months of the year. And before we start seeing some slowdown in August, and then finally in September, we see really strong weakness September and October. So based off that, I kind of see this kind of price action playing out for us in the second half of the year. We're already up, SPY's already up 6.5% year to date. The average market return is about 10 to 12% a year. So, for us to rally 4% in the next 6 months, I think would only make sense is if we get a pullback and then consolidation and then a strong rally to the end. If I keep going, you'll see more. This was another drop that we saw here. This was an 11% drop, and then we made new all-time highs here, and the market ended up dropping from that trade war. And keep in mind, that 5 to 10% drop is barring any sort of like unprecedented economic news. So obviously this was the first trade war with China here that caused this large drop. So I'm going to exclude this, because this is a low probability setup. If I come down to 2015, 2016, this bear market here that we saw, we made a new all-time highs here, and about 42 days later, we started seeing a market sell off 3%, ultimately down to 5% before resuming in a very, very strong market rally. So, based off that, that's where I get my thesis from. Since the all-time highs, this has been 21 days. So the longest I think it's taken is about 40 days or so. So we're kind of in the next week or two. I wouldn't be surprised to see some sort of market pullback, basically, is what I'm trying to say. And you shouldn't be surprised by that either. And so in preparation of that, I started kind of de-risking. So on my trade positions, I've been allowing myself to get called away. I got called away on one of my Google positions I had. I manually sold my APP shares for profit, and I cut down on the amount of cash secured puts I've been selling. And basically, I'm going to keep it that way until I get the pullback because I want to have the dry powder ready for when the market pulls back to really take advantage of the elevated volatility, get really good premiums, get assigned at really good prices, and get prepared for when the market pulls back and then ultimately has a really strong recovery and rally to the end of the year. I want to get assigned in this area here on this way down and hold those positions, not selling covered calls at all, holding those positions till the end of the year, selling covered calls when the move gets exhausted on the next leg up. I also want to kind of just talk about a couple things. So this I know like the past, I would say 3 years since 2022, I would say that maybe 2023 and moving onwards, I would say that the market's kind of unbelievable, right? I know we're all feeling in the economy, things are a lot more expensive. The jobs, high-paying jobs are harder to find, and homes are unaffordable. Yet, you know, the market keeps rallying. A lot of people thought here we were going to see a recession from these trade wars and all that, and like markets back at all-time highs. And it just goes to show that it's not worth it to try and predict what the economy is going to do. It's impossible. Recessions happen when you least expect it. If everyone expects a recession, enough people would prepare for it to kind of be avoided. A lot of things in economics can be looked at as like self-fulfilling prophecies. And so I know like it might seem unbelievable and you might feel like the market has to drop because, people are going to stop affording things, but ultimately the market is correlated to corporate earnings. And since 2020, corporate earnings have been rising at like record levels. I mean, even now. I mean, don't get me wrong, I thought we were going to see a recession in 2022, and the market seemed to think so too. I mean, interest rates were rising at extremely high rates. Loans were becoming more unaffordable. You would expect businesses to start defaulting, maybe people with variable interest rate loans to start defaulting on their loans and, causing that credit crisis thing. But it never happened. And corporate earnings kept going up and up, prices kept being raised, and people were still buying things. So that's why the best thing to do is to always to be flexible as a trader and investor. Technicals are your friend. I don't believe technicals are fake or anything like that, as long as you use the right indicators, right? Some indicators, yeah, like it's not about having a lot of data, it's about having the right data, right? So all institutions and retail traders use simple moving averages. That's why they work so well. I mean, look at these confirmations. If I turn all of them on, look at these price confirmations here on these drops, right? Look at this back test right here. So that's not a coincidence. These are because people are looking at these levels on the chart and they're determining that enough people have determined at this spot when the market broke down, this is a good opportunity to take profits and to short the market, right? This is not about institutions versus retail traders. Um, Especially when it comes to the S&P index, there's too many players for any side to manipulate it and take control. The index shows the majority of market participants and what they're doing, right? So this is showing here that the majority of traders, there were people going long here, there were people buying this, but the majority of traders, institutions were deciding to sell and go short here. That's what pushed the price down, right? Same thing here. A lot of traders were probably just taking profit and shorting here, but enough buyers stepped in to bring the markets up at this technical support level. So that's what makes the technicals extremely important because that's the only way you're going to be seeing what institutions are doing in real time. I know there's like apps where you can copy trades from like politicians, but keep in mind those all come out a quarter late. Right? They're not real time. Like you don't see Michael Burry's positions in real time. You see them 4 months or 3 months later. The only way you're going to be able to see what they're doing right now is looking at price action and volume and extremely common technical indicators, right? And to me, the only one that I really think is consistent are the simple moving averages. So when you see a test like this with high above average volume and price moving up, I, I can safely assume a lot of institutions were buying there. So just kind of I want to share like that lesson with you guys before I end this video. Um, it's important to trade what you see, not what you think. I didn't make that up. There's a lot of people who say that on YouTube, which I agree with. Um, Basically, in the end here, we have a 50 cross above the 200 moving average, which on the bullish side is a very strong indicator. The 50 is above the 150 and they're both starting to slope up. They're starting to slope up a little bit more. Once it gets to about 10 degrees or more, that will be a very strong indicator for price to keep moving higher. So with that in mind, we have earnings season. So next week, this coming up week, actually on Wednesday, we have Google and Tesla, and those two will set the tone for the rest of the Mag 7 for the week after. So keep in mind that when you're trading those names, they have earnings. Try not to hold any trades through earnings because it becomes really volatile. You want to keep the odds on your side, and let's see what the market brings us ahead. Good luck, everybody.